Hi, it is Alessio. Hope you're well. In this video, we're going to take a look at this data you're seeing here about the fear and greed index in relation to both stock markets and Bitcoin and what it potentially means for these markets. Plus also this very fascinating chart you're seeing here. I think this has important connotations and meaning for the general markets, potentially both the stock market and Bitcoin. So we'll talk about this and a lot more in this video. Join me. All right, guys, welcome back. Now, before we talk about this particular chart and also this important data about the fear and greed index and also about the dumb money sentiment readings, let me first of all talk about this chart you're seeing here. If you've been watching our member videos, you probably remember I mentioned this chart back in February. Before the Russian invasion of Ukraine, we talked about these important critical levels on the chart. So let me just play for you the clip and we'll come back. So provided the S&P continues to remain below 4490 or 4527, there is that slightly higher probability of a move potentially into this support level that we can see here, especially if the S&P takes out the lows it made in January of 4222. That actually increases the odds of a move down, potentially to test these support levels we can see here. If the S&P should see a move into these support levels here, I think some kind of strong bounce potentially from these levels is more likely or more probable. This yellow line is actually a major trend line support, which we'll have a look at in the Sunday video. All right, guys, welcome back. Now, as you heard me say in the members video, this was the important support range that I was looking for the S&P to potentially test. In fact, this was the monthly chart. This is the monthly chart of the S&P. And the first support level that I was looking for to potentially test was this yellow trend line that you're seeing here on this monthly chart. Let me also go on the daily chart so you can see it much more clearly. This is the daily chart of the S&P. And notice the S&P actually tested this level back on the very day. This, by the way, this first test of this yellow trend line support was the very day the Russian invasion of Ukraine, February 24th. Let me just zoom in on this chart. Let me just zoom in. As you can see, there it is. So as you can see here, on the very day of the Russian invasion of Ukraine was this drop in the S&P. As you can see, the S&P dropped quite extensively here to this important trend line support, this yellow level. This was the first support level I was looking to be tested for this correction, this pullback on the S&P. And notice the S&P actually managed to bounce strongly from this level. As a matter of fact, it continued to bounce for the next several weeks and going into March. As you can see here, the S&P went from the lows of about 4,130 approximately to just above 4,600. And if we take a look at this monthly chart of the S&P here, notice that the S&P has now managed to bounce from that first important support level, the trend line support, the yellow trend line support, a nice bounce up. And now we're seeing a retracement. And let me also show you, this is a summary of my trades. Now you can see in the first section, the first account, I actually made a small loss here of about minus 3,000 pounds in gilts, and also a small loss here on S&P trade, about minus 936 pounds. But overall, I made a gain here. So this particular S&P ETF trade made a profit about 15,000 pounds approximately there, and also another profit about 11,589 pounds in another S&P ETF trade. So overall, this produced a net profit about 22,944 pounds. And you can see in the second account down here, first a small loss about minus 1697 in gilts, but a profitable trade in the S&P ETF about 9,844 pounds, which produced a net gain here of about 8,147 pounds. So all in all, putting everything together, that's a net profit of about 31,000 pounds or about $40,000. By the way, I want to make it very clear that I did not place these trades perfectly, okay? So I actually made a few mistakes here, which I'll talk about in a separate video. But let me just say this, even though I took profits and I closed my positions this month, I'm not trying to say to anyone watching this video they should do the exact same thing. No, it's a decision I made for myself based on risk parameters. But let me also say that I'm also looking to get back in to the markets when I see another opportunity or another high probability chart setup. Now, before we talk about the fear and greed index for stock markets and Bitcoin, and also about the dumb money sentiment here, let me first of all mention a couple of things here which are really important to understand. First of all, I'm not a genius. Okay, guys, so even though I know the stock markets came down to this first level here, and it bounced, as you can see here. So it came down to this trend line support, this yellow trend line, and it bounced from this level. I want to make this very clear. I did not know with certainty that the market was going to hold this support level and then bounce from it, okay? My strategy is quite simple. First of all, I want to identify the critical levels of support on the chart, which I did. So the first level of support, as I mentioned in the members video, was this trend line support. So the yellow trend line support, and then the 21 monthly EMA, that was a second level of support. The 21 monthly EMA is the blue line you see here. And then the third level of support was this purple trend line support, which goes back, as a matter of fact, goes back quite some time, as you can see on this chart. It goes back all the way to 2018, as a matter of fact. So there were several levels of support, several layers of support underneath the price. And I was looking, essentially my strategy was to gradually scale in at each of these levels. Okay, as I'm sure you know, this is called scaling in or averaging in into the price as the price is coming down into those key levels. So I did not know beforehand with certainty that the price was going to hold this first level of support at the yellow trend line and then bounce from it. Again, there was no certainty about that. It was only a probability. And that's all you need. All you need is a probability. So again, what I was doing is scaling in gradually with small positions, like for example, 1/4 or 1/3 positions at each of these levels. Again, whether it's the yellow trend line, the first support, or the monthly EMA, the blue line here, or the purple trend line down over here. It doesn't really matter. The fact is, all I was trying to do was build a position by scaling in gradually with small positions at these important support levels. Let me also mention it's a very risky strategy because there's absolutely no guarantee the price is going to hold any of these support levels. So it is possible for the price to push lower and lower, and this makes it quite a risky strategy. But I was willing to take that risk because, again, I was scaling in with small positions and also because I knew when to get out in case I was wrong. We'll talk about this in a separate video. And I want to make a second important point here. So as I mentioned before, the price came down to that important trendline support, the yellow level here. But here's the important point to remember. On the day that we tested that trendline support, on the day the price dropped nicely into this trendline support, here's the thing. This was also the day, as I mentioned before, this was also the day of the Russian invasion of Ukraine. So if you were paying attention to the news, especially financial news, and if you were paying attention to what everybody else was saying out there, predominantly almost everybody was scared and fearful about the markets. The majority of people out there thought that it's finished, it's over. The market's about to collapse and we're about to go into a major bear market. That's what everybody thought on that day. And you can see what happened was the reverse. Now, the reason I mentioned this is because of something I mentioned before in a previous video. Go ahead and watch if you haven't seen it, which is that, guys, remember, financial news, okay, financial news, in fact, any kind of news is the effect. It's not the cause. So a lot of people think that news causes the market to move. It's not the case. In fact, the news is the effect, not the cause. And this is why I believe it's dangerous to pay attention to financial news. Guys, as I've said before, financial news is the toilet paper of all the news out there. All right, guys? So I actually think the true value of financial news is really that. It's toilet paper. It deserves to be flushed down like a piece of toilet paper because it's worthless. Guys, as I've said before, and I'm going to say it again, I love this particular German phrase, which is Preis über alles. Let me repeat this. Preis über alles. What does that mean? It means price over everything. The only thing that matters is the charts. So pay attention to what the charts and the key levels are telling you. All right, guys, let's continue now with this. We can see that at the moment, according to the Fear and Greed Index, the stock market is seeing a lot of panic right now. So we're seeing a lot of pessimistic and fearful sentiment. As we can see, this gauge here, this measurement, it's about 42. Actually, I think just about a month ago, it was in extreme fear territory, about over a month ago. But in any case, we can see it's now back in fear territory for the stock market. And as far as Bitcoin is concerned, yeah, about the same. So Bitcoin also is experiencing a lot of fear and pessimism. I believe just yesterday or a couple of days ago, we had extreme fear on Bitcoin. But nonetheless, you can see both these markets right now, according to the sentiment readings, are both in fear territory, in extreme pessimism. In fact, let me show you this. This is a fascinating piece of data. This is the dumb money sentiment. Notice that right now, as I'm speaking, as I'm making this video right now, we are in extreme pessimism, but not just any kind of pessimism. And according to this particular survey, again, of dumb money sentiment out there, we are now at such a low reading on the pessimism that the emotional sentiment of investors is now even lower than the day of the Russian invasion of Ukraine. You can see that's the day of the Russian invasion of Ukraine, massive drop in sentiment and an extreme low in optimism. And we can see here's something else. That's not all. What I also found is this, that the optimism reading, or I should say the sentiment readings right now, is even lower, get this, it's even lower right now than the COVID crisis back some years ago. Take a look at this. Again, this is March of 2020, March 2020. That was at the beginning of when all the panic started about the pandemic and the COVID situation. And you can see in 2020, it got even worse. You can see sentiment dropped, as we can see here, all the way to, in August of 2020, dropped really low here to about a 20% mark. You can see back in 2020. But right now, guys, look at this. Right now, we are even lower than that. The emotional sentiment of people out there, of the investors out there, is even lower than where it was after at the start of the COVID pandemic crisis of 2020. And I think this is a very interesting situation we're in right now. Here's something to bear in mind. This data, which shows, again, the emotional sentiment of investors, again, the fear and greed index, and everything we're seeing here and here, these are contrary indications. All right, guys? So again, these are contrary indicators, which means that usually whenever sentiment drops to extremely low levels, this tends to be a contrary or positive indication or a bullish indication for the markets. All right, guys, remember, right now, the majority of folks out there, the majority of people out there are extremely pessimistic and fearful. So this probably is a bullish or a positive sign for the markets and likely for Bitcoin as well. However, here's the bottom line. Let's go on the chart of the stock market. So let's zoom in here on this chart. This is the daily chart of the S&P. Here's the bottom line. Here's what we need to remember. This means that if the market wants to persuade us and show to us that it's still in a bull market, it needs to respond to this particular low extreme reading on the sentiment, on the dumb money sentiment here. So because we have such an extremely low reading on the sentiment readings here, on the dumb money sentiment, then the market has to persuade us and show to us that it's still in a bull market by reversing and rallying, or essentially forming a bottom. That means this. That means if the market, if the stock market, and also I would say Bitcoin as well, if the market can, let's say, put in a reversal in, put a strong reversal in the next few days, I would say this week. This week could be very important, by the way, for the markets and for Bitcoin as well. Because if the market can respond in a contrarian fashion to this sentiment reading here and also this as well, so if the market can actually show a strong bullish reversal from near current levels and put a strong rally in from here, all right, guys, that actually could be a strong indication that perhaps the bull market may continue. Now, we shall have to see about that. But let me also say something else, something very important, that you probably know from a video I made about some weeks ago, I think some months ago. I mentioned something very important. I said there is an exception to the rule. You see, guys, usually, yes, usually a very low optimism or extreme pessimism reading like this typically is a contrarian indicator for the markets and also for Bitcoin as well. But here's something else. There is an exception to the rule. The exception to the rule is either at the beginning or during a bear market, or if the market wants to make an extended correction. All right, guys, that means this. That means if the market fails, so for example, if the S&P fails to respond to such extremely pessimistic and fearful readings about the sentiment, so if it fails to respond to the sentiment reading, and if it fails to put a rally in the next few days or this week or the next couple of weeks, then that means the market's in big trouble. All right, guys, let me just repeat that point because it's quite important. If the stock market fails to respond to the sentiment readings, the extremely low contrarian sentiment readings we just saw, if it fails to respond, if it fails to put a bottom in, and if it fails to rally quickly in the next week or so, that means the market is in big trouble. It's a big warning to the market that it could potentially fall even further. It might mean two things. So what I'm saying is this. If the market, let me get my pen here for a moment, guys. So that means if the market does not respond and put a rally or reversal in to such extremely low readings in the sentiment, you can see here and here, that means there are two things that may be happening here. It means that potentially, number one, we could see an extended correction. Okay, I'm just going to put in abbreviations. But also, number two, it could also mean the start of a bear market. All right, so there are two implications here. And by the way, let me make this very clear. An extended correction can also mean a deeper drop in the market. It does not have to mean a bear market, but it can mean a bigger decline or a bigger drop in the stock market. If the market, that means if the stock market fails to respond to the extreme sentiment readings that we have here on the stock market and Bitcoin, also this dumb money sentiment you're seeing here. That means this, guys, pay attention to what's going to happen in the stock market this week and also in the following week as well, because whatever happens to the stock market could potentially have an impact also on Bitcoin and crypto as well. All right, guys, as we know, there's a positive correlation often between the S&P, the stock markets, and Bitcoin. So whatever happens to the stock market could very well have an impact on Bitcoin and crypto as well. Guys, one final thing, make sure you watch my members video, the members video I posted just recently, because we covered a lot of detail, both about the Elliott wave counts and the potential very important key levels on the stock markets and Bitcoin, also gold as well. So we covered a lot of detail about the potential Elliott wave counts and the charts of Bitcoin, stock markets, and much more in the members video. And if you're not a member, you can join on that link you see right there, and I'll put the link for in the description. By the way, that link gives you 3 months extra free of membership, so that's a total of 6 months. And guys, I look forward to seeing you in the next video update. Thank you very much indeed. Bye for now.